Hi everyone and welcome to this YouTube channel. In this video, we are going to talk about new Bitcoin ETF grows at record speed. So before starting this video, please like this video and subscribe to our channel for future updates. Cryptocurrency hit the New York Stock Exchange on October 19th with the introduction of a new Bitcoin-linked fund. The fund quickly grew to over $1 billion in assets, becoming the quickest ETF to reach that threshold, according to Bloomberg data. Offered by ProShares, this new exchange-traded fund, ETF, marks a long-awaited milestone, experts say. Crypto enthusiasts in the United States have been trying to get Bitcoin-linked investment products approved for several years now, says Teresa Morrison, a CFP with the Beckett Collective. Trading under the ticker symbol BITO, the fund lets investors buy into Bitcoin without actually buying it on a crypto exchange. There have been some regulatory hurdles and delays by the SEC in making a Bitcoin-linked ETF available to investors. Unlike past proposals the SEC has rejected, BITO does not directly hold Bitcoin, but instead trades on Bitcoin futures, an important distinction. Here's what investors need to know. What are Bitcoin futures? Bitcoin and Bitcoin futures are not the same thing. With futures, you agree to buy or sell the asset in the future at some specified price. You are not directly buying and selling the underlying asset, Bitcoin in this case. When that specified date arrives, you must buy or sell the asset at the agreed upon price, no matter what the actual price of the asset ends up being that day. If your contract comes up and Bitcoin is worth more than what you agreed upon, as an investor, you make money. That's called trading at a premium. If Bitcoin's price is less than you thought it was going to be, you lose money, and it's called trading at a discount. By investing in this new fund, you're simply betting on the potential for your shares of the ETF to be worth more later. And the underlying driver behind the value of your shares is Bitcoin. There are many assets that trade on futures, usually commodities like oil, grain, or coal. For example, you can buy a gold futures ETF instead of buying actual gold bars. Futures contracts are derivatives of Bitcoin and are not directly backed by physical Bitcoin, says Dana J. Menard, a CFP and founder of Twin Cities Wealth Strategies in Minneapolis. This may lead to a bit of confusion as the price of the ETF will not necessarily correlate with the price of Bitcoin. For example, if Bitcoin went up by 30%, the Bitcoin futures ETF might only rise 20%, Huntsberger says. That's because futures ETFs hold contracts that periodically expire and have to be repurchased, says Huntsberger. This can add to tracking error between the ETF and the underlying asset, in this case Bitcoin. Should you buy a Bitcoin-linked ETF? Whether you're buying cryptocurrency outright or investing in a crypto-linked ETF, experts recommend never investing more than 5% of your total portfolio in speculative assets like cryptocurrency or specialty ETFs. Bitcoin is still very new compared to conventional stock market investing, so it lacks the historical track record investors can use to anticipate future performance. Before you buy shares in a Bitcoin ETF, cryptocurrency, or any other speculative investment, remember to only invest what you're okay with losing, and never at the expense of other financial goals like paying off high-interest debt or saving for retirement. Bitcoin is highly volatile, and while there might be a difference between the price of Bitcoin and the price of BITO, the ETF does not protect you from the ups and downs of Bitcoin. This year alone, Bitcoin experienced an all-time high of over $60,000 in April, before abruptly losing half of its value over the summer, though it has returned to around $60,000 in the month since. You should expect the same volatility even in the ETF. That said, if you're interested in exposing your current portfolio to cryptocurrency in some way, and are okay with the risks, BITO makes it easier than ever for investors. While it isn't a direct investment in Bitcoin, it can give investors with little knowledge about how Bitcoin is typically bought and sold in exchanges exposure, says Menard. If you're new to cryptocurrency, trying to navigate a cryptocurrency exchange can be intimidating. This ETF lets you add some Bitcoin exposure to your portfolio directly through your brokerage. Plus, you can hold it within tax-advantaged accounts like a Roth IRA or 401k, if you choose. Thanks for watching.